Imagine waking up one morning and discovering that the global financial system has silently detonated overnight. Not because of a war, not because of a pandemic, not because of a stock market crash, but because of a $600 trillion monster hiding in plain sight. A machine built on invisible bets, bets that tie every bank, every corporation, and every government together. This is the story of the derivatives market, the most explosive creation in modern financial history. A system so massive, so fragile, so interconnected, that a single crack could bring down the world economy in hours. 2008 wasn't the collapse, it was only the preview. Today, the same forces have returned. But now, the stakes are far higher. This is the $600 trillion time bomb. And whether you know it or not, you are standing right on top of it. To understand the monster we face today, we need to go back to the moments when history whispered warnings the world refused to hear. In 1929, leverage built quietly, confidence evaporated suddenly, and markets collapsed like a dying star. In 1971, the world abandoned the gold standard. Money became an idea. And ideas can be manipulated. Then came 2001. Financial engineering reached new heights. Banks built towers of complexity they couldn't even map. And in 2008, everything came crashing down. Not because of housing, but because of the derivative bets stacked on top of housing. The lesson should have been obvious, but instead of dismantling the machine, we made it bigger, riskier, more interconnected. Now the patterns of the past are returning, the same signals, the same warnings. But this time, the system is 6 times larger than the world economy. The modern financial system is a machine built on leverage, powered by confidence, and controlled by institutions we assume understand the risks. But the truth is darker. The Federal Reserve created the perfect conditions for explosive risk-taking: years of 0% interest rates, unlimited liquidity, cheap money. Every rate cut multiplied the bets in the derivatives market. Fractional reserve banking amplified it further. For every dollar deposited, $10 or $20 of loans were created. And on top of those loans, banks layered derivatives. Then came the petrodollar system, a world forced to use dollars for global trade. Demand for dollars meant demand for US debt. And demand for US debt became fuel for more derivative bets. Finally, quantitative easing poured gasoline on the fire. Trillions created from thin air, inflating assets, inflating leverage, and turning the entire financial system into a time bomb. Look at the world today. The pattern is back. Interest rates are swinging violently. Each movement sends trillions through the derivatives system. Global debt has reached levels never seen in human history, a mountain casting a shadow over every nation. Banks are cracking under pressure. In 2023, one regional bank nearly triggered a global meltdown. If a small bank can cause that much chaos, what happens when a giant fails? Meanwhile, geopolitics is fracturing. Nations are no longer cooperating. They're hoarding gold, weaponizing currencies, preparing for a world where alliances no longer guarantee safety. We have entered the most fragile moment in modern financial history. Every warning sign from past crises is flashing again, but louder and faster. So what happens when the $600 trillion time bomb explodes? It begins quietly. A failed hedge, a missed margin call, a sudden rate spike. Liquidity vanishes overnight. Banks freeze lending, markets seize, counterparty failure begins. One bank falls, then another, and another. A global cascade spreads at the speed of software. Currencies swing violently, savings evaporate, housing collapses. Trade shuts down, and a new monetary order begins to form: digital reserve currencies, regional blocks, gold-backed systems. De-dollarization accelerating. The world resets, because it must. In the end, the real threat isn't derivatives, it isn't debt, it isn't leverage. It's the illusion that the system is safer than it truly is. Modern finance runs on trust. Trust in banks, trust in governments, trust in currencies, trust that tomorrow will resemble yesterday. But trust is fragile, and once it breaks, everything tied to it collapses. The $600 trillion bomb won't explode because of numbers. It will explode because confidence dies. And when it does, the world will divide into 2 groups. Those who ask, "How did this happen?" And those who say, "I knew this was coming."